Good afternoon. Welcome to the McDonald Hopkins Business Hour. Our business hour today is titled Real Estate Reboot, the COVID-19 Crisis and Beyond, and we'll be addressing some of the pressing questions of landlords, tenants, and lenders. Today's business hour is brought to you by the McDonald Hopkins Real Estate Recovery Group and Jones Lang LaSalle. Your panelists are Rob Roe, Managing Director of Jones Lang LaSalle in their Cleveland, Ohio office. Rob will be covering the role of tenant reps and property managers in our discussions today. Also on our panel is Dana White. Dana is a member of McDonald Hopkins, practicing out of our Chicago and Detroit offices. Dana's practice focuses on commercial real estate and commercial finance. And today, Dana will be covering the role of tenants. With us is Alex Guevara, who is also a member of McDonald Hopkins, practicing out of our West Palm Beach, Florida office. Alex, too, focuses on commercial real estate and commercial finance. And Alex is going to be covering the role of lenders in today's discussion. And I'm Pat Karbowski. I'm also a member of McDonald Hopkins. I practice out of our Detroit office, and I, too, focus on commercial real estate and commercial finance. I'll be your moderator for today's discussion. I'm also going to be covering the landlord's perspective. Now, I want to point out that while our particular offices are physically located in Ohio and Illinois, Florida and Michigan, our practices are not locally or even regionally limited. Each of us from McDonald Hopkins has a national practice, as is common in the real estate, commercial real estate and finance space. And of course, many of you know Jones Lang LaSalle is a global entity with offices around the world. The point being that no matter where you are, we can help, and that's what we're here for today as well. A couple of housekeeping matters to take care of before we get started. All attendees are muted, but we do want to hear from you and take your questions. So we've reserved some time at the end of our discussion to answer your questions, and you could submit your questions by email to events@mcdonaldhopkins.com. That's events@mcdonaldhopkins.com. Our agenda today is going to be simple. We're going to start with a discussion of what we are seeing now. We'll move to a discussion of what we may see in the coming months. And then we'll introduce some wildcards into the discussion about what we might be surprised by. And then finally, we'll finish with our question and answer time, as I mentioned previously. And with that, let's move right into our panel discussion. Let's start with what we're seeing now. And since the impact of the many shelter-in-place orders was likely felt by tenants first, I want to start with some questions for Rob and then Dana. So Rob, how have tenants been utilizing tenant reps, or how should they be?
Thanks, Patrick. You know, the very first thing everyone should be doing out there, and it may seem rudimentary, is to make sure you formalize your team. Put your team in place, your legal, your finance, operations, your commercial real estate folks, and, you know, your broker, of course. On the screen, you see a timeline here, and, you know, the portion in red is really what we've been through. You know, what we're now looking at is the future fit and planning, the productivity challenge that we're going to all face, and then the interim reentry. And really, the two other things that we've really been focusing on with our clients is the reentry assistance, you know, developing guidelines, analyzing workplace environment, having peer-to-peer conversations amongst clients and information sharing. And then the other thing that people should be looking at is their portfolios, whether it's one office or several, and analyze those relative to leases and owned facilities, and work with your team on understanding what the opportunities looking forward might be.
Excellent. And what kind of proactive steps can tenant reps be suggesting to their tenants? You know, they're all in a crisis mode here. How can they be proactive?
Well, this is what we're hearing from our clients, and we have another slide here. You know, some of the primary ones is the reentry strategy. How are facilities and buildings going to be reopening? Training and workforce. You know, understanding how the staff will be able to implement these things. You know, being confident in the individual's health. And then a word that we hear a lot in the news today, and we hear a lot in our industry, is reimagination. And, you know, there's a couple of things that are really relevant we'll get into as the call goes on, but, you know, is financial relief needed? and some companies need it more than others. And then what deal structures are available to help with that relief, understanding construction, whether it's in place or about to take place. And then once again, how do we re-enter these facilities? And that is going to be really the driver probably over the next 30 to 60 days.
So do you think there are variables, though, to consider from sector to sector or region to region?
Well, certainly from a regional perspective, I think it'll follow the same path of what we've seen on the news relative to the areas that have been hit hardest. Example would be like the New York, New Jersey metropolitan area. I believe that area will be a little bit slower to get back to a full working environment. And, you can kind of take it down that list for states and metropolitan areas as far as how that'll play out. The retail sector and the hotel sector has been certainly hit the hardest. The office sector, for the most part has done pretty well in the work at home environment. And then the industrial sector seems to be still doing pretty well, certainly not as much on the manufacturing side, but the distribution side of the industrial world right now is really critical to what we're seeing as far as, all of us at home and keeping our economy going.
That's so true. Thanks, Rob. So Dana, as lawyers, we're always telling our clients that step one in any situation like this or dispute is to read their leases and to read their loan documents. Are tenants going to find any help in their leases for the rent relief that they need?
Pat, I'd say, the initial ask for my tenant clients has been typically provisions in their lease can excuse them from non-payment of rent. And while it varies from lease to lease, generally speaking, most force majeure provisions are narrowly drafted and do not cover a pandemic scenario like we're facing today. And even where a provision does contemplate, for example, government restrictions or regulations, most well-drafted force majeure provisions specifically exclude non-payment of rent as forgivable under them. So again, it depends on how it's drafted and that specific lease, but there hasn't been a lot of relief there. I've seen retail tenants look to certain co-tenancy provisions where maybe the anchor tenant is closed due to the COVID-19 shutdowns, and they may have some relief in their co-tenancy provisions. I've also seen a handful of leases where a well-crafted condemnation provision contemplates rent abatement for a temporary taking lasting longer than a specific period of time, but I haven't quite seen those play out yet because the time period just hasn't been long enough. And then outside of the language of the lease, tenants are looking at equitable doctrines such as frustration of purpose, impossibility, or impracticability. But again, these doctrines are very narrowly construed generally, and in asserting these claims, even if a tenant's ultimately successful, it will require time and expense and ultimately litigation. So that's why I think it's probably important for tenants to get in front of this an open dialogue with their landlords rather than, in this case, in most cases, trying to rely on one of those doctrines.
Yeah, and I think the same thing can be said for landlords, particularly with regard to the narrow construction of force majeure clauses, unless there's an express inclusion of things like epidemics and pandemics in the force majeure clause, it's not likely to provide either protections to landlords or give them outs with regard to claims by tenants that they've not delivered the product that the contract requires. And I don't want to get too deep into the weeds on this topic because of our time constraints, but I do want to say to our attendees, if this is a concern for one of your listeners, we'd be happy to discuss it with you in more detail offline. But it sounds like the moral of the story is that this is a time for cooperation and negotiation and not a time for litigation for landlords and tenants. But there will be certain tenants who have no intention of cooperating or negotiating, which, Dana, leads me to ask you about this idea that's been coined, the Cheesecake Factory solution. What's the tenant's risk in simply not paying rent? I mean, is it better to beg forgiveness than to ask permission in this situation?
Well, Pat, I think the Cheesecake Factory example is interesting, but really isn't applicable to most tenant cases. I mean, the Cheesecake Factory owns 294 restaurants in 39 states. Most tenants don't have that kind of leverage. So, well, in the short term, as many people know, there are eviction moratoriums in various state and municipalities based on executive orders and administrative orders issued by governors or courts, but which may provide a measure of release in the short term. But long term, those defaults would still be out there, and landlords are going to look to exercise the remedies under their leases when courts do open or these stay-at-home orders are lifted. And the risk in not paying, looks to be things such as late fees, default interest that can accrue on missed payments, and ultimately defaulting under their lease and facing eviction termination, and landlords pursuing their remedies, which includes going after tenants for past due and for future rents and other damages. So I've certainly been advising my clients to get in front of it and communicate with their landlords before they miss rent payments. And to remember, landlords are feeling the strain too. So in my experience, they've been fairly reasonable and working with tenants in good standing to come up with a reasonable solution.
Yeah, that's good. And that's been my experience with my landlord clients also. They want to work with the tenants, but if you have a tenant who acts unilaterally and perhaps belligerently, they're not going to get the kind of cooperation that they might otherwise. And the other thing I would throw in there is that at some point, the lenders are not going to allow landlords to leave unpaying tenants in the premises. So better to work together than not. Now, let me throw this one out to both Dana and Rob. Let's say a tenant has done its initial diligence and has made the decision to ask the landlord for some rent relief. What should that initial ask look like? So, Dana, should it be a phone call or an email or a letter? What do you think looks best here?
I think it depends on the specific tenant situation and what their relationship with their landlord looks like. I've had tenants call me at various stages. They may have initiated a call or email correspondence with their landlords just to get in front of it and open the dialogue. But ultimately, I certainly think that involving your attorney or your broker in formalizing whatever solution seems reasonable between the parties is important, and always important to memorialize that in a forbearance agreement, a lease amendment, or some other written documentation.
Good. And Rob, when we get to that point, what should tenants be asking for in their rent relief package? What's their strategy?
Well, it's different amongst different tenants, and some that have multiple locations should figure out, which locations maybe need the most relief relative to their business. But really, the two things that people are asking for are rent abatement and or some rent reduction. And I do think it's important to keep along the theme that we've been talking about in the reasonableness. If you go in and start with, we need 12 months of free rent, that's not reasonable at this point in time, because none of us know what's going to happen over the next 12 months. Ask for something over the next 3 to 6 months, but expect to also need to have a payback remedy. This isn't just free, because landlords also still have to pay lenders and pay on mortgages and pay their investors. So what we've also seen in these is what is these remedies? There are different things, and some of it can depend on lease term if it's a lease. Do you have a year or 2 years left? Well, then, and you like the location, you do a blend and extend on your lease. If not, maybe you have 4 or 5 years left and you're not willing to make a longer commitment to that facility, then maybe you take some relief now and amortize the relief over the balance of a term starting at a date, say 3, 6 months, beginning of next year out.
Good. Yeah. And let me spend a minute on the responses I'm seeing from landlords on this rent relief ask. It's really going to vary from sector to sector. So, for example, as Rob mentioned earlier, the industrial space is still pretty strong. And so you're going to find less flexibility among landlords, or maybe more requirements to prove financial need. And in contrast, in the retail space, particularly with small businesses and the inline tenants, as opposed to the anchors and big boxes, we're seeing a lot of flexibility in the landlord's approach to rent relief. Landlords want their tenants to survive and succeed. We'll talk more about this in a minute, but all of that depends upon the lender's flexibility if the landlord has debt on the property. And we're not seeing, as at least in my experience, we're not seeing as many abatements, although there are a few. I think most noticeably in my region, the 3-month across the board abatement given by Bedrock out of Detroit to their qualified small retail tenants. But that's not the norm. And again, you'd either have to have no debt on your project or leverage with your lender to grant abatements in this fashion. And again, we'll talk more about how important it is for the landlords to consider their lender's consent in a minute. But for the most part, landlords are making these rent relief decisions on a case-by-case basis, a sector-by-sector basis, and even by region, as you mentioned earlier, Rob, for example, if they're in the project is in a particular hotspot. So there's generally no one-size-fits-all remedy here, and it's very good to. There's an old proverb that says there's wisdom in many counselors. You want, as a landlord, to get the counsel that you need for fashioning the right rent relief package for your tenants. And all this means that with the deferrals that we're seeing a variety of these rent relief packages. And I want to give just a few examples of what I've been seeing. I think it'll be helpful for people to know what others are doing out there. I've seen as few as 2 months deferred. I've seen as many as 6 months base rent deferred. But as has been stated, certainly the tenants thus far are not being unreasonable in their asks. And usually operating expenses and CAM are not being deferred. On the other hand, the payback periods are generally longer. The longest I've seen so far was 18 months and the shortest 6 months. And obviously the landlords know that it's going to be difficult for tenants to pay both the base rent, the CAM, and the repayment of the deferral. So they understand that, and they're trying to work with their tenants. So there's a variety of other rent relief tools in the landlord's toolbox, but for the sake of time, I'll ask again our attendees to contact any one of us offline if they're looking for other ways to creatively structure their rent relief packages. But now, whenever we get into an economic crisis in the leasing sector, we hear this analogy to the proverbial three-legged stool, and that is, unless we have each of the 3 legs in place, the tenant, the landlord, and the lender, the stool will collapse. So with that in mind, I want to bring Alexa into the conversation. And my first question on the lender's perspective, Alex, is whether it's too early to get a sense of how lenders will respond to landlords' requests. And if you're seeing lenders respond already, what terms are you seeing from them?
Well, I think like everyone, lenders are facing an unprecedented experience. And so they did take that first breath to figure out what they were dealing with and how to move forward. But I think we've now seen that banks are reworking their branch operations and pushing mobile banking in order to increase social distancing and minimize contacts. We're seeing banks that are still willing to lend. Certainly they're doing SBA and PPP and disaster relief loans in big numbers. But we're also seeing banks willing to forbear and modify loan documents to work with their customers. I think, banks have gone on the record, some banks, to even say that they're willing to suspend foreclosure actions, at least in the short term, to try to work with their customers. In terms of terms, we're seeing.
Go ahead and tell me about the terms, and then if you would, speak to the issue of whether there are certain types of lenders who are more flexible than others.
Sure. Well, in terms of terms, I think banks are trying to customize what those modifications or forbearance agreements are going to look like based on their customer, but certainly banks are offering anything from like fee waivers to increases in lines of credit, interest-only payments in the short term, or maybe even lower interest payments in the short term. And they're deferring payments for about 90 to 120 days. Again, it's customer by customer, and I think we're seeing a lot of flexibility from the banks, not only because they're facing pressure from above to be flexible, but also because they're going into this downturn healthier than they were in the last downturn. In terms of the types of lenders and their flexibilities, I think there's definitely a spectrum. On the one end, you're going to have the CMBS lenders who are less flexible because they're dealing with a loan product that has to be in many respects uniform so they can pull it and securitize it. They are able to give their borrowers some accommodations, but their ability to do so is, again, very inflexible. On the opposite end of that spectrum, you're going to probably see the FDIC regulated banks that are able to be more flexible because regulation agencies and the federal government are basically easing restrictions on their underwriting processes to allow them to be more flexible. And somewhere in the middle, you're probably going to have your Fannie Mae, your Freddie Mac, and your credit unions that are moving towards the same flexibility, but are waiting for those regulations to be eased up. For instance, the credit unions recently had a loosening of the restriction on their lending caps so that they could lend more money.
Alex, that's very helpful. And I have 2 points on lenders for CMBS loans. Be very careful about entering into lease modifications or rent concessions that may trigger your personal liability under your guarantees. And then also remember that it's very expensive if you get transferred from your master servicer to your special servicer. So be very careful in what you ask for.
So, Alexa, what should the landlord's initial ask to the lender look like? How should they be preparing for this?
It's important when you're talking about how do you approach a lender to remember what the lender is going to be looking for. A clear path to repayment, protection of its collateral, and a waiver of claims and defenses from the borrowers and guarantors. And that's fairly typical in any kind of forbearance arrangement, but I anticipate we're also going to be seeing that in connection with these modifications. I think borrowers should also be looking for their lenders to be asking them for pre-negotiation agreements. And normally lenders want those so that the parties can be creative and discuss possible resolutions without committing to any one course of action until it's papered and signed. Going into discussions with their lenders, I would recommend that borrowers formulate some kind of roadmap to guide the discussions. They should be working with their accountants to identify ways to rework possibly borrowing-based formulas and identifying how much they need to borrow. I also think they need to work with their attorneys to go through their loan documents and identify not only defaults but potential defaults so they can address as many things as possible as this may be their one shot, to do so in a manner that doesn't constitute some kind of anticipatory breach under the loan documents. Borrowers should also be gathering information, preparing to go into these discussions with their lenders, information including their most recent financials, which incidentally the lender may ask a borrower to provide in connection with consent to lease modification. And they also should have their most recent assets and liability information handy, including valuations, if they're going to try to see if any equity is left to draw on. They need to have a cash flow projection as well as income and expense projections for like the next 6 to 9 months, I would think. And then finally, I would be prepared to answer questions from the lender about the availability of additional guarantors or additional equity that might be available in the existing collateral. Or if you have a new collateral, like perhaps you have a subsidiary that can act as an additional guarantor and pledge property to help you draw money down. The other thing I would say before I leave this point is really think about your approach to the negotiation. I think Pat and Dana did a good job explaining why you want to maintain negotiations on a friendly level. I think playing hardball with a lender will shut down the ability of the parties to be creative and looking for resolutions. And it also burns a bridge that you may need to cross over later.
Let's move on now to our next section, and that's what can we expect to see in the coming months? What are we going to see as these shelter-in-place orders are lifted and the doors are once again opened? And let's start with Dana here. let's ask the question that nobody wants to think about. Are some tenants just delaying the inevitable here?
Well, Pat, I think, it's going to vary obviously from tenant to tenant, sector to sector. Some tenants may have just needed a little help getting through these quarantine periods. I think this is particularly the case for the office sector. Once these stay-at-home orders are lifted and office tenants are able to go back, that might look different from an office space or procedural standpoint, but I think in terms of being able to operate and function as a business, they may be in a better situation. I think nobody thinks it's going to be just business as usual across the board, and I think particularly retail and restaurant or recreational tenants are at risk here for rent relief 2.0 because they're just kicking the can down the road 3 to 6 months. And even when they are open, revenues aren't going to be where they were, and they're not going to generate enough to be able to meet what's now not only their normal rent obligations, but in many cases, these blend and extend scenarios where, they may have additional amortized back rent that they're responsible for too. And are looking at just defaulting on their leases down the road.
Yeah, I think landlords need to be prepared for this as well, and this will play into their decision-making process in granting rent relief. For example, part of the consideration for the rent relief might be to take personal guarantees if there were none, and to eliminate, the non-recourse protections that tenants may have negotiated. You might also want to require more frequent financial reporting. And here's one I haven't seen, and there may be limitations to this, but landlords may also want to consider requiring payment to the landlord of the maximum rent allocations from PPP loans obtained by the small business tenants. And again, I want to qualify that because I'm not sure if there would be limitations in the PPP loan documents towards such a commitment, but it's something to consider if you're a landlord faced with a tenant on the ropes. And the converse is true as well. There may be some landlords who don't recover. So Dana, let me ask you this one. Should tenants be preparing for potential landlord failures in the coming months?
Certainly. I think if a tenant does not have a subordination and non-disturbance and interment agreement with a landlord's lender, or at least the favorable non-disturbance and their quiet enjoyment provisions in its lease, it could be out in the cold. If a landlord defaults on its loans and a lender forecloses, particularly in cases where they might be in a below market rent situation, a tenant could be looking at being kicked out or terminated. So it's very important that they review their leases in this process and make sure there's adequate protections either in the body of their lease and more so, even if they can negotiate it as part of these forbearance agreements, making sure they have an SNDA with their landlord's lender.
And Rob, what about tenant reps? What should tenant reps be doing in preparation for potential landlord failures in the coming months?
Well, there's a couple of things that they can do, and one would certainly be to keep the communication line open and understand the financial viability of the landlord. Certainly on the CMBS debt, it's easier to make sure that and follow that. But the other thing is, make sure that they have the ability to provide the services that are needed. You can also look at self-help clauses in leases, and this might be a time if you're being asked to secure your lease further because you're getting relief, that you have the ability to enforce some type of a self-help clause that in the event services or other things in the building are diminished, that you can actually take on those yourself and further reduce rent.
That's good. Let me shift gears a little bit here, and we can expect a lot of tenants will want to have their leases renegotiated, or some will have their lease terms coming to an end or options coming up in the coming months. So, Dana, what terms might be changing in our leases in the future here?
Well, I think just like what we saw after 9/11 or the Great Recession, there's going to be a renewed focus on some of these provisions, such as force majeure, co-tenancy, maybe mutual kickout clauses, condemnation clauses, and tenants looking for stronger language or language that contemplates these sort of pandemic situations in the future. And I think it's a reasonable discussion to have with the landlord when entering into new leases, because this is the new world we're facing. So I do think that these provisions will be changed or modified based on what we're experiencing right now.
I agree. I think landlords too are going to be viewing things like the force majeure clauses in a new light, and probably with a new sense of importance. Certain clauses weren't always given the attention that maybe they should have, but I think that's going to change as well. Some had suggested even before the COVID crisis that we were nearing the end of the current landlord, we'll call it landlord favorable cycle. Let me ask you, Rob, what do you see from a market perspective in that regard?
Yeah, as we look at the national landscape of the different markets, we track, a clock that basically shows, the different cycles. And usually a stronger landlord market is something that is in the 12% or lower vacancy area. I think we're going to see some things in the short term, certainly until there's some type of vaccine or out of the woods, where you're going to have landlord projections for renewals are going to be shorter now. They're going to need to be shorter. Tenants are not going to be willing to commit the time into a lease. They're going to be trying to preserve capital in the short term, and you might see some leases that have 1 or 2 years left on them that may just renew for 1, 2, 3 years, where the current cycle has really been strong, and landlords have been able to get 7 to 10 year leases out of their clients. So now you're going to have a cycle where we're going to project over the next probably 12 months that it's going to soften. And then one comment I would make is that the tenants that are in a position to make a longer term deal and have strong balance sheets, they should have a nice position of leverage, because quite frankly, the landlords are going to want them. And that's how they secure long-term cash flow. And that's how the capital market world, revolves in that 5-10 year cycle.
Yeah, I want to stay with you for a minute, Rob, because the idea of building health and wellness is certainly not a new concept, but walk us through what you think we can expect in this area as the coming months unfold.
Well, if you can see the slide that's up, there's really 4 components. There's the government, that is pretty much dictating right now in the short term what's going to happen with the shelter-in-place orders and the shutdowns and the overall, laying out a strategy that will be then implemented. Then you have the landlord and the occupier or the tenant. We're going to see both of those entities are going to need to make some changes to how they do business. Something as simple as how many people get on an elevator, what's the path of travel into a building. On the occupier side or on the tenant side, what's going to be the social distancing, layout for a tenant? Will you have shifts now? Do the litigators come in on Tuesdays and Thursdays, and the business lawyers and the real estate lawyers are Monday, Wednesdays and Fridays? Cleaning protocols on both sides will be very important as well. But the most important thing that hasn't been talked about a lot is going to be the individual. And, all of us out there have different health conditions and timing conditions, and quite frankly, are more nervous than others about, what this really presents. And they have the right to do that, and they have the right to feel that way. So ultimately, there's going to be a balance between the individual being willing and able to come into work or wanting to come into an office, and really, what is it going to be for them when it comes to risking their personal health, possibly against their economic health. And so that is something that both the landlords and the tenants themselves or the companies are going to need to pay, close attention to.
Good, and that slide is very helpful. And speaking of sliding, I'm going to slide into our next section now, because I see that we're getting close to 40 minutes now, and I want to make sure we have time for our question and answer period. So I'm going to move into the wild cards, and just a couple of questions here. And Dana, I want to ask you first. There's been a lot of talk about business interruption insurance. How might that be a wild card in the coming months?
Definitely. I think a lot of tenants have made business interruption insurance claims that have been denied. And I've seen a lot of landlords actually insist as part of these rent relief packages that they do make these claims. lawsuits have already been filed by tenants who have been denied. Most famously in my region is the Billy Goat Tavern in Chicago, which is actually seeking class action status. And they're alleging that the presence of the coronavirus on and around their property has rendered it unsafe and unfit for their intended use and caused, therefore, physical property damage or loss under their policies, and that the state stay-at-home order was issued in direct response to these dangerous physical conditions. I think we're going to see a lot of lawsuits alleging these types of theories and why their claims shouldn't have been denied. And ultimately, depending on how precedent is set by these courts, it will impact how policies are written in the future and maybe even future legislation as to how to handle these claims. I was just seeing this morning on the news that there's some concern there could be a flare-up again of the coronavirus a year from now, next winter. And if that's the case, we're going to be right back here with policyholders making these types of claims. And I think the litigation that ensues in the meantime will have a direct impact in how that's handled in the coming months.
Good, yeah, and I've even seen some talk about legislation which may not help now, but may be helping in the future, so that this type of situation won't be avoidable under coverage. But want to move to one final wild card question here, Alexa. I want to get you to talk about last night's Senate bill. As most of us are probably aware, the Senate passed the bill to infuse, $350 billion into the PPP loan program. Let's talk about that as a wild card.
Thanks, Pat. Yeah, I think the willingness for the lenders to continue to work with the borrowers to forbear and to grant modifications, I think in part has to do with the PPP funds being there to keep their businesses going. And with the passage of $310 billion second tranche of PPP funds, I think we're going to see their continued willingness to do that. But the wild card is that when we had the first tranche of PPP funds, there was apparently a perception that lenders were prioritizing the loans based on the amount of the loans so that they could garner the larger loan fees, and that eventually manifested into a class action suit, I think, by small business owners. To some extent, it's substantiated by the figures that the SBA is putting out that says about only 18% of the initial tranche of PPP funds went to these loan applicants that were asking for $150,000 or less. So this new bill will be a wild card in that it deals with that kind of perception, and it's going to include additional regulation to assure that money's getting where it needs to go. And I think they've even set aside an additional $60 billion to give directly to smaller banks and credit unions so they can make sure it's getting out to the small business owners.
That's good. And so that we have time for answering the questions that we're receiving, lots of good questions here. I want to conclude our presentation portion now and move into our Q&A period. And I'm just going to go through these in the order received. First one says, many tenants are refusing to pay rent citing the virus, but the unemployment records don't reflect 100% of many companies, and many companies have applied for federal money to keep the workers on the payroll. Can anything be done, or are landlords at the mercy of their tenants? I think as a landlord, I'll answer that one, or landlord's perspective. And I really don't think the landlords are at the mercy of their tenants. I think it's more the landlords are potentially at the mercy of their lenders, because in so many of these, and again, that's certainly true in the CMBS space. As Alexa pointed out, there is flexibility that is being given to regulators in the Fannie Mae and Freddie Mac area, and the banks and insurance companies have their own built-in flexibility. So having said that, the landlords, I think, have a variety of tools in their toolkit to not simply let their tenants off the hook. And for example, we've talked about the deferrals. In some settings, an abatement may be used. Landlords aren't really keen on abatements, but if an abatement or a deferral isn't going to be used, you can talk about maybe getting rid of some of the negotiated benefits that the tenants maybe have been able to get in their leases, like removing CAM caps and eliminating pending free rent periods. So if you've got a tenant who negotiated for each January over the next 3 years is going to be free base rent, you can eliminate that. You can add or extend personal guarantees, and you can go the blend and extend route, which kind of leads into our next question, and that is, please clarify the blend and extend approach if short-term left on lease versus long-term. Dana, why don't I throw that one to you?
Sure. So if a tenant has, for example, maybe only 4 or 5 months left on their lease, and they're happy where they are, and we're looking potentially to extend anyway, it may be a month-for-month extension for whatever the rent deferral or abatement relief that's been granted. So a landlord may give a 3-month rent deferral to a tenant, and if they're willing to extend and the tenant wants to extend, they may just tack on 3 to 4 months of the term so that both parties still get the benefit of the bargain for the full lease term anticipated. Now, if a tenant has a bit longer on their lease, let's say a year or more, or isn't interested in necessarily extending, the alternative blend approach would be to amortize whatever the rental deferment or abatement, deferred or reduction was, and amortize that over the next 3 to 6 or 12 months of the remaining lease term, so that in addition to your normal rental obligation, that catch up, if you will, would be spread across the following 3, 6, or even 12 months of the term.
That's good. Rob, I want to throw one your way now. We have a question: will remote working replace office now that people know that they can?
I think there will be some of that. I think what we're going to see is a combination of offices both growing and shrinking. And, there's going to be a few questions that will need to be answered. What is the essential need of the employee to be in the office? Some people are discovering that they can work from home. So I mentioned earlier, doing work shifts. And then I think the other thing you'll see is some social distancing or barriers between the different workplaces. The ratios for employee to square foot have been driven down over the last several years, and I think we may see a relaxing of those. And places like collaboration areas that may have, held 12 people in a room may be limited to 4. But I do think that some companies will visit that. It will come at a cost, however, and that cost will be technology and the ability to provide the employee the ability to work from home on a better internet connection, on a better phone connection, and really with the materials they need to perform their job.
Good. Here's one that probably falls into your wheelhouse too, Rob, but I want to give you a chance to answer first, but this may be something that everyone on the panel can discuss. The question is, if someone visiting a commercial property gets sick from COVID-19, can the owner be held responsible? It's a 2-part question. And should building managers and or owners of commercial properties post notices that visitors or tenants enter at their own risk? Rob, that second one I'll throw to you, and then I'll talk about premises liability on the first one and invite the other panelists to join also.
Yeah, I think what we're going to see in some cases, and I certainly will stay away from the legal opinion, is going to be, do people get tested for simple things on the way into buildings? On their way in, are they going to, be tested for a fever, or, are they going to, need to limit the visitors to a building, as an example? I think the employer will be responsible for their employees. And I think on the visitor side that you might see a tightening of of the ability for visitors to come in the short term. Again, I still think that we need to keep in mind that there will be a vaccine and things will lighten. I think Dana pointed out earlier that there's a good chance that this could come back again come next fall, winter. So I think that people in the short next 12 months of time will be tested and could be tested if they're visiting a facility.
Yeah, and on the premises liability question, can the landlord be held responsible if someone gets sick? I think, a clever plaintiff's counsel will come up with an action to that effect, but whether or not it's successful is another matter under premises liability laws. You could also indicate, if we're talking about a negligence type standard, landlords are going to want to take precautions in common areas. They're going to want to, as you discussed earlier, Rob, they're going to want to have cleaning protocols in place and followed. They're going to want to consider limitations on the numbers of occupants in elevators. They're going to want to consider the return times of elevators and all kinds of common area considerations need to be taken into account by the owners of the buildings, the landlords, so that they can overcome the negligence standard when tort claims start to come out. I'm throwing out a lot of legalese here. The gist of what I'm saying is that you must take reasonable action for that which is reasonably foreseeable. And an argument could be made that it's reasonably foreseeable that your common areas would contain COVID. So you're going to have to plan accordingly as a landlord and building owner. I want to throw that out to any of the other panelists. Any other thoughts on that?
I think the one comment I would have for landlords is that you revisit your insurance policies. Normally, this type of pandemic does not fall into any kind of coverage, even business interruption coverage, because there has to be some kind of property loss in order to trigger the coverage. And I also think that, you should look at your umbrella policy, because if you've got coverage, you may be able to get it through there, unless you have some kind of exclusion for contaminants, which would include something like the virus.
Good. Let me scroll down here and get another question. While negotiation may be the best route, shouldn't written notice be given to the landlord to put forth an argument why rent should be deferred or forgiven under the lease, e.g. force majeure, impracticality of performance, temporary taking? I think you touched on that, Dana. But maybe the emphasis here is the written notice from the tenant. Why don't you talk about that for a second?
Certainly. I mean, where a tenant has that argument based on the language of their lease, certainly I think it's good to memorialize. But I think the important thing on the written notice is to be carefully drafted and to seek the assistance of your legal counsel and making sure you're not inadvertently opening yourself up to additional liability. I think whenever you're formally requesting from your landlord some sort of rent relief, as Rob alluded to earlier in the presentation, know your ask and be reasonable and your basis for why you're asking it. I think what we're seeing, because of everything we discussed with the narrowness of force majeure clauses or other clauses in the lease, the important part of a written notice is explaining why you may not be able to meet your rental obligations and what you are looking to do in order to overcome those hurdles. For example, that you have been proactive in seeking relief from PPP or other disaster loans, that you're doing everything in your power to meet your obligations before you go to a landlord and ask for help. What landlords have not been willing to do is simply grant these requests to tenants that have sat back or just gone to their landlords initially. I think it is important in a written request to make sure you're laying out what you've done thus far in order to meet the demands of your lease before asking for that request.
Good, thank you. And another question, I'll take a crack at this one, but I'll throw it out to you too, Dana, because you talked about this as well. Should tenants and landlords file a claim under their business interruption assurance, no matter what the policy says, just to have the claim on file in case there is a legislative or other mandate for insurance companies to pay out on these claims? And as I mentioned, with regard to legislation, it's very difficult to pass legislation that's retroactive, but of course we're in very unusual times, so it could happen. And the other thing I would say is you definitely want to protect your claim from any contractual statute of limitations. Most insurance policies are going to have a much shorter statute of limitations period than the law will provide. And if you don't file that claim timely, you may be barred on an entirely procedural basis. Dana, anything else you want to add to that?
Oh, Pat, I think that's a really good point. I think you do want to preserve your claim. And so look at your policy, see what it says. But certainly, if you have that coverage, I think it's important to consider filing those claims.
Good. We've got one more here. Let's see. And Alex, I think you answered this, but I want to make sure we respect the question author. How you expect lenders to handle non-compliant loan covenants? I mean, is there a short answer to that?
I'll try to make it short, but I think what we're going to see is a change in loan documentation and loan underwriting. So much is in flux right now with the regulating agencies making changes that certainly there are non-compliant covenants. For instance, the debt service covenant ratio with people taking out PPP loans, you run the risk that you're going to trigger some kind of default under a loan document. You also have covenants on providing tax returns that are tagged to the end of fiscal year end, and those have to be revised. So I think the lenders and the borrowers on both ends need to go into the loan documents and identify those areas that might be potential areas for default, and try to work in some flexibility to give people time to respond to whatever's happening outside of their environment.
That's good, and there's an awful lot packed into that short answer. So thank you very much. At this juncture, I want to thank our panelists for joining and for taking all the time and effort they put into making this presentation and this business hour possible. I also want to remind our attendees that you should feel free if you had a question that didn't get answered or you'd like to pursue something a little deeper. Feel free to email any one of us. Our emails are right there on the screen for you, and we're easy to find on your favorite web browser too. So again, thank you panelists and thank you attendees, and everyone stay safe and healthy. Bye-bye.